Hello again, everyone. It's Vince Ford from TradingWinds.com, and this is our update for March 6th, 2018. Let's take a quick look at today's markets. Well, we saw something today that we haven't seen in quite a while, and that was, a quieter day, a day where from start to finish, most of the market was range bound. We still closed in positive territory. The Dow finished higher by 9 points today, while the S&P 500 was up 7. The Nasdaq managed to gain a 41. That has been the best performing index here. And the Russell, though, had another great day, up 16 points. Bonds were fairly quiet. TLT up 11 cents. The 10-year yield held steady at 2.880. Gold, however, did very well, up almost 16 points. And this really was due to weakness in the U.S. dollar on more fears of a potential trade war. And, it wasn't a huge move, but we did move lower. Whenever the dollar moves lower, gold tends to trade higher. Crude was fairly flat today, losing just about 10 cents at the official close. Now, there is a pattern, a charting pattern that I want to share with you that really gives you a heads up to what's to come in the future. And what I mean by that is taking companies that have either taken a beating over the last little while and are making a comeback, or stocks that start out like Apple, like Amazon, like Netflix, new companies that kind of tread sideways for many, many years before the stock just takes off and turns them into these powerhouse stocks that we know them as today. Let's have a look here at Apple, for example. And I'm going to use the monthly chart. And what I have here on my chart is the 20-period simple moving average. You don't even need that, but it does help. And the Ichimoku, Ichimoku Kinko Hyo indicator, otherwise known as the cloud indicator. And normally this comes with a bunch of other lines. I've taken it off. All you want is the cloud portion, which is known as span A and span B. And what I want you to look at here is that for many, many years, the price just trades in a very, very tight range, usually overlapping the cloud or just below it. And then at some point, you're going to cross the cloud here, cross that shaded area with slope on that moving average, right? With that slope higher. And what's key here is that you, you take out the previous highs. So I hope you can see this on your screen here, but you can see once price took out these highs here, stock went slightly higher, came back to retest it, and from this point on has pretty much been a straight ride higher. Have a look at Amazon now. Okay, there it is. So for many, many years, tight range, right? Whether you want to call it a channel, anything you want to call it, you can box it, shade it here like this. And once you get that breakout, usually comes back to retest. And from that point on, it's a straight ride higher. Have a look at Netflix. It works extremely well here across it. There's another pattern. Just gives you a heads up. Now, it doesn't mean you're not going to use your usual rules to get in and out. If you were to get in here, it breaks these highs and you get in for the ride, on a significant move, you're going to start scaling out. And you're not going to sit through it if it completely breaks down on you. Of course, you're going to use your technical rules that you would otherwise use, your regular strategy to manage this. But along the way, once you see this breakout, after many years of consolidation here, that's when you want to keep something like this on your watch list and look for these nice setups, because they can be very, very rewarding. I mean, think about it, especially if they're paying dividends. Okay, you can write calls on these along the way. It's incredible what you can do with it. But have a look out for this pattern. It's everywhere, believe it or not. Once you flip through a bunch of charts, you'll see exactly what I'm talking about. That's about it for now. Enjoy the rest of your day, and we'll see you on our next update.